Hey, it's Mack with PriceActionTradingSystem.com. It's Monday, it's December the 21st. This will be our chart lesson for the day, and this may be our last one for the week. I'm probably going to come in and trade tomorrow, and if depending on how the day looks and how it's going, I may go ahead and do one more chart lesson for the week. So we'll just have to see, but probably after tomorrow, that'll be it till the end of the year. And I believe January 4th will be our first trading day back. So it's going to be quiet the next couple of weeks. So don't worry, I haven't gone anywhere. I'm just taking the end of the year off for holidays here in the U.S. And the market will continue to get slow. You can see the volume was a little bit down today. Still pretty good day. There were some good moves and some decent trades here. But you can already see the volume dwindling a little bit. And it will continue to do so. Doesn't mean that we won't have some, we could even have a big, huge move one day or something, but generally it gets pretty slow this time of year. And because most of your professional New York types, they're taking they're off and the funds are wrapping up the end of the year and there's just not a lot of trading, as much trading going on, the volume kind of drops. So, but doesn't mean you can't trade, doesn't mean there won't be some good moves. But they'll probably be fewer and farther between. So, but in the end, today was just a range day. We kind of broke out of the range right at the 3 o'clock close, and but for the most part, prices spent the day between I'd say 1996.50 or so, and up here around 2013, 2014, somewhere in that range. Um, Most of the early morning was just a couple of points here, but I like these kind of days. These are pretty easy trades through here, and this was a nice move down. This was really the move of the day, and all this stuff didn't happen out here till after 2 o'clock. So I generally, most of you should know my rules by now. We don't trade much after 2 o'clock. Prefer not to take any trades after 2 o'clock. Doesn't mean that there aren't occasionally some good moves like this. We had a reversal pattern right here, and there would have been a nice failed second entry short. You could have entered right there, ridden this up. Um, but it's just generally not a smart move, because if you do make a mistake, there's no coming back. You don't have enough time, and a lot of times you'll get hung in a trade that goes nowhere. And there's more things that can go wrong trading after 2 o'clock that can go right. So from all intents and purposes, I just don't believe in trading much after 2 o'clock, and I usually don't mark any trades after 2 o'clock. So, but let's back out, look at the bigger picture, and show you what I saw today. First trade I saw, I marked this one green. I do like the fact that, notice we're working up and it's really steep. Look how far we've gotten away from the EMA. But look what's happens here. We do have what looks like a break right here. And this big move up. And then notice we get this very slight move higher. Notice how far we are away from the EMA. And then we get this little break higher that fails almost instantly. You don't want to take that first entry, but when it ticks up and then turns and goes right out the other side, all in one bar, I like going short there. What you could do is just have a stop right there, since it did all that in one bar. And you still got plenty of room before you get back to the EMA. And we're way overdue, because we had been away since early, well, let's just look and see what time it was. We hadn't touched the EMA since 7:30 Sunday evening. So we were way overdue to come back to the EMA, even if we're going to go higher. So this is generally a pretty high probability trade. It is. I'm marking it green for some different reasons, because a lot of times, sometimes these breaks in the overnight don't count as a break, and you'll have to get another break. So this could have been the first break, but the fact that we kind of had that little trap right there. It goes higher first and then turns down. We're probably coming back to the EMA, and that's exactly, notice it touches it to the tick and bounces. So I like that one. I am marking it green, but for all the reasons I just discussed, I like that trade for a quick scalp. And then look what happens. We come back. We get a second entry long counting off the low here. There's actually a second entry long counting from the high, pullback, first entry, pullback, second entry. But look at that signal bar. It's not a horrible signal bar, but there's no break of this trend line yet. Um, it's not a real, it's not as, I mean, I'd like to see that being completely green there. But the main reason is we don't have a break of that trend line yet. But notice we get a break here, we pull back. And we do get a second entry long counting from the low. There's your first move or your first entry pullback. So a break above this would be a second entry. But again, it's kind of neutral. There's a one bar trading range, and then this is more of a bearish bar. So I just don't think it looks, you don't have a good enough setup to go long. But then you get a failed second entry short, and you get a nice bullish bar. So I like that one. You've got enough room to get out before you get to the highs up here. You would have had this here, and it still pretty much fits up there. But I kind of moved it down at the end of the day because we got more touches, and that seemed to be kind of the line between most of the support and resistance. So I like this trade. Nice, easy, quick move. And then notice what we did though. We had a break of this channel here, moved to a new high. So maybe this early one didn't count, and this was the break, the move to a new high, and then we just kind of went sideways from there. It's tempting to go short right here, but you don't really have enough information. If you move this all the way over to the far right side, you can see when that bar set up, you don't have enough information really yet to say, hey, this is a trading range going across here, because we really don't have any matching highs up here. It looks like a failed break higher, which it could be, but that doesn't mean it'll take off. But when it turns up there and then turns back down, and notice that you got this trend line moving up, it looks like it has a break, a new high for that as well. But what I like here is the fact that notice you kind of got that thin spot across there where it's what was resistance is acting as support, and it pushes through, pulls back, and turns down. I like that. That's a big bearish bar, and again, it went higher first and then turned down and went out the other side. So I like just having a stop there, and this one runs straight down until it finds support right here. So that turns out to be a nice trade as well. We get a break here, move to a new low, and we basically get a double test of this level right here. But more than anything, we got a double bottom and a little failed break lower, and that's a little reversal bar. I like that to go long. Obviously, a lot of people liked it. It didn't go much further, and then it comes down, and we actually get a low that's actually a double bottom there, but that low is lower than that one, so that's why I really like that little trap there. But notice you got a higher high here, pullback first entry, pullback second entry. That's the second entry long. But again, you find support off this low, and we traded up into this. So the odds are, if a lot of times you can catch these little failed break lower, and sometimes you catch the low of the extreme low, and it takes off, and you get a measured move or more. And so I like to try to catch those lows. And this one, it just ends up finding resistance up here, and you don't want to enter in all that. That's, we just want to make that. That's one of those lavender burgundy type areas where you just want to stay out of it. And then notice what happens. It just kind of confirms that resistance across there, and you get this failed break out of it. You're probably coming back down to here. You may go further. You may come all the way down to here. There's plenty of room to get out before you get back to these lows, and really you should have your line drawn across here. I don't have it on there, but you can see that support right across there, and that's where you're looking for it to go, and it could go lower, and that's exactly where it bounces. It pulls back, and then it turns down again, and it finds resistance right across that same level. And at this point, I would be looking for at least maybe a measured move like so, and that kind of puts you back down in this area again, and that's kind of where it bounces. It's tempting to go long right here, but you got this trend line working down, and it's holding on this side, the trend channel line. You can see it right there, and so you better wait on a break. But when it turns up and you get a failed second entry long, And this is also, notice how it goes lower than all these. So it's like a breakout pullback short, a failed second entry long. Notice how we shot through the EMA, pulled back. We're probably going to at least get a new low, and who knows? But it really shoots right on down. It comes back again, and I kind of, this one I made it green. But if you caught this, you caught a runner that you could ride all the way down. If you just caught that one trade, if you caught either one of these, you caught that runner, or you caught a runner. And so I kind of like this one right here. Um, this is a breakout pullback short again from these lows. If you move that down, you can see it's a perfect retest of those, that double bottom, those two matching lows there, here and here, right there and right there. And but more than anything, notice how we're kind of stacked up sideways there, and it's that little failed break out of that resistance. It's a retest. Um, Thinking maybe we'll get another leg down, a measured leg down, and this thing just keeps going. If you measure this, I didn't talk about this earlier, I should have. But once we broke lower, you should be looking for a measured move, and you probably want to measure it from up here where you get the most touches. So that would be my first target as far as a move. And you notice that's pretty much where we got to. We pushed a little bit lower, so I ended up moving this down to where that double bottom is. But that would have been my first target, and that's another reason I like entering there. I don't think you want to enter on this one. It's too much overlap. It does look similar to this, but you've got more overlapping bars here where you only got a couple, and this one pushes higher, and it doesn't break out the other side. It's tempting to enter there, but I think you better, my opinion is skip that one. And then look what happens. We come down here, we bounce once. It's tempting to go along there, and if you want to be super aggressive, you could. I mean, this one's really aggressive because this thing's moving down. We do have a break and a couple legs down to a new low, but we still had this gap right here, and by the time we got to here, I really would have expected us to fill that gap, and we didn't fill it. So I would have been real hesitant of going long there, other than the fact that we're way away from the EMA. But notice what happens. It comes back and it tests that area again. That's like you've tested this area 2 more times. So I like that one to go back to the EMA. Again, it's green, but I still like it. Kind of using it as the double test rule. And we actually tested it 1, 2, 3 times with 3 different bars. Notice the new low, and then one, and then you went higher, and then you came back and tested it twice, and then you go higher. And then look what you have here. You had pullback first entry, pullback. That's a second entry. It's a higher low. This is like a double bottom pullback. It's a fairly bullish bar. And then it pulls back and fails to go lower again. So now I like it to add on. And then you get a failed second entry short. Notice this is a new low lower than that one. So that's a first entry, second entry. And notice that's when it really took off. This is also a breakout pullback long. But I liked adding on to all those, to be honest with you. It's scary to add on here. But this entry here is really a better entry than this one, although this is a failed break. Again, this is a little congestion area. If you draw your lines there, you can see it's a little trading range. And notice what happens. We traded up into this, so then you get your first breakout is a failed break lower, and so you expect it to try to go higher, and it does. It goes up, comes back, and if you probably wouldn't have been scalped out of this one, but you could have used a limit order and used this one to enter right there in case you didn't, if you weren't 100% sure about that one. But this is a failed second entry short for all intents and purposes here, because you got a new low first entry pullback, and that's, even though there's a push down right there, you definitely don't want to go long there, but this is like one leg. If you went to a little bigger chart, it'd be one move. Notice the high pullback, first entry pullback, and then there's your second entry long. And then you get that next push down, and notice how the trend line holds. I like that one, thinking it's probably going to break out, even if it comes back and gives you a breakout pullback long. And so you get a chance to add on twice here, or at least get one trade out of this, maybe two. Uh, but if you're a really smart trader and you really like, paying attention to what's going on, you might have a triple load going there, which I don't recommend that really for most people. You probably would have scalped out of one or two, or both of these by now, and this is probably a new entry. But definitely you want to enter here because this is a breakout pullback long. The trend line's holding, the EMA's holding. Lots of reasons to like that one. A failed second entry short, so it's a trap. And you can see once it finally got going, it took off really fast. And we come back, we kind of find some resistance here. You would expect that, and then it pushes up. It's tempting to go short up here. If you had a little better bearish bar, I'd say go short right there. But I don't like that one. And then we just kind of going sideways here. You got this support and resistance here. It pushes up and tests it right there. But you never get, this is like a little breakout pullback short, but this is such a big bar. Just kind of wait and see, or let it break lower like it did here and drop a limit order back here. And you could see you could get filled all the way back to here. But what I like better is to wait and then get this big bearish bar and then go short, because now you got a failed second entry long. Actually, it's not really a failed second entry long, but look what happens. You pull back. There's your first attempt to go higher. You pull back. There's your second. And so a slightly smaller chart, you would see a failed second entry long there, but it's close enough. The main thing is it pushes right through that EMA, pulls up back and tests it, and that really confirms the third attempt to touch that trend line, confirms that. I like that one, and off it goes. And that got you into the 2 o'clock hour, so you really didn't want to take. And look how we're just going sideways. This is more of this right here. Stay out of it. Notice there is a failed break higher, and it goes lower, which, you really could have entered there. But you see it's right after the 2 o'clock hour. If you were still trading and you could find a way to get in that one, following our rules, I'd be okay to go short right there. So I'll mark it. But I just think it's too late in the day. That would be the absolute last one I'd take, even though there's some nice moves over here. Notice what happens here. This is a great reversal pattern right here. Notice we're kind of going sideways. You get that little failed break. So you got a new low, pull back, first entry, and look how it rockets right through the EMA, pulls and then turns down for a second entry short. It fails, and look at it go. That's a classic reversal pattern with our failed second entry short. That's what you're looking for, to try to get on with the other side, or waiting on to see to get on with the opposite trend. And really, there weren't as many trades today, but there were some pretty good ones. And it's pretty standard day. This wasn't a real hard day to read or anything. So if you traded today, hopefully you didn't think it felt like a hard day to trade. This is what really throws people off when it goes sideways. You got to learn to recognize this. Anytime the EMA or the prices are swinging back and forth to both sides of the EMA, even if it's trending in one direction or another, that's more of a neutral type day, and you can trade it both ways. Until here, once it starts trending down, you're only interested in going short, and then here you're really only interested in going long, and then it kind of goes neutral again. Now we're swinging back and forth again, although this is a much bigger range than up here. It's not a whole lot bigger, but it is bigger. So, but just remember that when the prices are swinging back and forth, look how we're above it, we're below it, we're above it, we're below it, we're above it, we're below it. That is a sure sign that you've got a trading range. Try to find the support and resistance areas, and trade it like a range. Use your shorter term. Notice how I used all these short-term trend lines in here. You're coming down, you get a break. You tried to go lower, but it failed, and you get the reversal, you get the trap. But of course, you're still looking for a retest to the top here. It's not really a range yet. And then you got the trend line working down. You get a break right there, close outside a new low. Then you're moving up. You're really moving up here. You get a little break and a new high, and then you're moving down. I don't have this one drawn on there, but you can see it right there. and you get a little break outside, close, and new low. It's all in one bar, but you'll see that a lot on this real short ones. Then you're moving up, break, a new high, then you're moving down, you get a break, a new low, then you're moving up, break, new high, you're moving down, break, new low, moving up. You never get a break on the way up, and this one's still going higher. So notice how we kind of overshot it there, and we've overshot it again. Maybe there's two tiers here to this one, although generally trying to use price action from one day into the next doesn't. Now we've probably touched the upper side. Doesn't normally come in. Doesn't. It's normally not a good idea. You can always. I'll see people do that, and it's nothing wrong with it. It's probably valid, but you'll get thrown off more times than not doing that. You're better off to only use the price action from today, and that includes the overnight. All this is overnight. The 8:30 opens right in here somewhere, I think. I don't remember specifically which bar. It's right in here near this double top. You can see that 8:30. Actually, it's right in here. So you want to include all that from the overnight, but you don't want to come back. I don't know if you can see that line going up and down right here. That's your 3:15 cutoff from Friday. And so this was the overnight, Sunday evening into today. This is all today's trading. And so only use the price action starting with that. And notice I drew that trend line off that first few bars there. It does extend down there, so it still matches into that stuff from yesterday. But you don't, in other words, what I'm talking about is you don't want to come over here and find a trend from Friday working lower and try to trade that into today's price action. So I hope that's clear. I don't want to confuse people. So, but anyway, not much else you can say about today. Most likely we'll have one last chart lesson for the year, for the 2015 year tomorrow, and then I'll be off for the rest of the year. I probably won't answer many emails. If you would, I'd ask you, unless you just got a critical question or emergency, I will be, checking my email as often as I can for people that are having problems with maybe downloading a manual or anything like that. But as far as looking at charts and answering questions, I'd ask you to hold off, please, until after the new year so I don't come back overloaded, because I probably won't. I need to have a break occasionally to get away from this stuff. And so for the next couple of weeks, I won't be, I don't, I just will try to stay away from looking at charts and answering questions for that. If you want to send me one, you can, but I won't answer it till after the new year, most likely. So, but anyway, I'm going to wrap it up for today. Most likely we'll be back to do one tomorrow, and that's probably going to be it. But I'm done for today. And so I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.